What's happening, Pulse Nation? Get ready for a rapid-fire update that's going to blow your mind. The news cycle is moving faster than ever, and if you're not plugged in, you're missing out. We've got the inside scoop on the biggest stories that are shaping our world right now. From blockbuster financial reports that are making waves across industries to groundbreaking advancements that are pushing the boundaries of what's possible, we're diving deep into the data. You won't want to miss a single second as we break down the numbers, explore the implications, and give you the critical insights you need to stay ahead. So buckle up, because the future is unfolding, and we're here to bring it straight to you. First up, we're looking at a titan in the tech world, a company whose financial performance is a key indicator for the entire industry. Their latest numbers are in, and they're telling a story of resilience and strategic growth. We're talking about sales figures and revenue guidance that have the market buzzing, and you're going to want to hear what it all means. Next, we're diving into the heart of innovation, where cutting-edge technology is not just a buzzword, but a driving force. We'll explore how a major player is leveraging this momentum to not just meet expectations, but to shatter them, especially in a sector that's rapidly transforming. Get ready to understand how their strategic moves are impacting the landscape and what their future projections signal for the industry. Then, we shift our focus to the very pulse of digital transformation. We'll uncover how a leading company is capitalizing on the explosive demand in a specific high-growth area, delivering results that are not only impressive, but are setting new benchmarks. This is a story about strategic product development and market dominance that you won't want to miss. Finally, we're keeping our eyes on the horizon, looking at how companies are not just responding to market trends, but actively shaping them. We'll break down the latest forecasts and what they signal for the broader economic and technological landscape. Don't forget to smash that like button, subscribe to Qualcomm Pulse, and ring that notification bell so you never miss an update. Financial Powerhouse delivers solid performance. Broadcom's latest financial report reveals a company hitting its stride, meeting revenue expectations, and providing optimistic guidance for the future. This is a significant indicator in the tech sector, reflecting the health of semiconductor demand and enterprise spending. Broadcom, a powerhouse in both fabless chip design and infrastructure software, has announced its second quarter fiscal year 2025 results, reporting total sales of $15.95 billion. This figure aligns precisely with what Wall Street analysts had predicted, indicating a steady performance from the company. More importantly, Broadcom has provided a revenue forecast for the upcoming quarter that surpasses market expectations. The company anticipates generating around $17.4 billion in revenue for the next quarter, a projection that stands approximately 2.1% above the consensus estimates from analysts. This forward-looking guidance suggests a strong conviction from Broadcom's management regarding sustained demand for its products and services. On the profitability front, Broadcom's non-GAAP earnings per share came in at $1.69, a figure that edged out analysts' consensus estimates by a modest 1.6%. While the beat was not substantial, it contributes to the overall narrative of a company executing effectively against its financial targets. Delving deeper into Broadcom's performance, its long-term growth trajectory is particularly noteworthy. Over the past 5 years, the company has demonstrated an impressive compounded annual growth rate of 20.9% in sales. This sustained expansion not only outpaces the average growth seen within the semiconductor industry, but also underscores the strong resonance of Broadcom's offerings with its customer base. Semiconductors are inherently cyclical, and while periods of high growth are often followed by contractions, Broadcom's consistent performance over an extended period highlights its resilience and strategic positioning. Further analysis of its recent performance reveals an acceleration in growth. Broadcom's annualized revenue growth over the last 2 years has reached 30%, exceeding its 5-year trend. This acceleration suggests that demand for its products has been particularly robust in the more recent past, potentially driven by emerging technological trends. This quarter's year-on-year revenue growth of 22% is a strong testament to the company's current momentum. Looking ahead, Sell-side analysts project revenue to grow by 21.3% over the next 12 months. While this represents a slight deceleration compared to the growth rates observed in the last 2 years, it remains an exceptionally high growth rate for a company of Broadcom's scale, signaling continued market confidence in its future prospects. An important metric for semiconductor companies is Days Inventory Outstanding, DIO, which reflects capital intensity and the dynamics of supply and demand. In a tight supply market, stable inventories typically grant chipmakers pricing power. Conversely, a steadily increasing DIO can signal weakening demand, potentially leading to production cutbacks. Broadcom's DIO currently stands at 38 days, which is a significant 24 days below its 5-year average. This metric suggests that the company is not experiencing an excessive inventory buildup, indicating healthy demand and efficient supply chain management. Overall, Broadcom's Q2 results presented several key positives, including a notable improvement in inventory levels and revenue guidance that exceeded expectations. Despite these strong fundamentals, the stock remained relatively flat in after-hours trading following the announcement, trading around $306.15. While the company delivered a solid quarter, the market's immediate reaction suggests that investors are weighing these results against broader valuation considerations and future growth potential. But how is this solid performance translating into market dominance, especially in the red-hot AI chip sector? Stay tuned as we break down the specific drivers behind Broadcom's impressive AI revenue surge. AI boom fuels Broadcom's beat and raise quarter. Broadcom has once again demonstrated its prowess in the semiconductor and infrastructure software markets, delivering a strong fiscal third quarter that exceeded analyst expectations and providing an optimistic outlook for the current period, largely driven by soaring demand for its artificial intelligence chips. In its fiscal third quarter, which concluded on August 3rd, Broadcom reported adjusted earnings per share of $1.69 on total sales of $15.95 billion. These figures surpassed the consensus estimates from FactSet, which had predicted earnings of $1.66 per share on sales of $15.83 billion. On a year-over-year basis, Broadcom saw a substantial 36% increase in earnings, while its sales grew by an impressive 22%, underscoring its robust growth momentum. The company's positive trajectory is projected to continue, as evidenced by its forecast for the current fiscal fourth quarter ending November 2nd. Broadcom anticipates revenue to reach $17.4 billion, marking a significant 24% increase from the same quarter last year. This forward-looking guidance outpaced Wall Street's consensus estimate of $17.01 billion in sales for the fiscal fourth quarter, signaling continued strength and demand for Broadcom's diverse product portfolio. Despite the strong financial performance and optimistic guidance, Broadcom's stock experienced volatility in extended trading. The stock fluctuated between gains and losses, ultimately trading up a fraction to $307.21 in after-hours trading, following a 1.2% rise to close at $306.10 during the regular trading session. Earlier in August, the stock had reached an all-time high of $317.35, a level considered within a profit-taking zone following a recent breakout, according to IBD trading principles. This breakout occurred on June 3rd, when the stock surged out of a 24-week consolidation pattern at a buy point of $251.88. A primary driver behind Broadcom's exceptional performance is its leading position in the design of application-specific integrated circuits, ASICs, for artificial intelligence in data centers. The company is a key supplier of custom AI chips to major tech giants, including Google, Meta Platforms, parent of Facebook, and ByteDance, parent of TikTok. These custom accelerators are critical for processing the massive datasets required for advanced AI and machine learning applications. Beyond its AI-focused ASICs, Broadcom's business encompasses a broad range of networking and wireless connectivity products. Furthermore, its acquisition of virtualization software firm VMware has added a significant software-centric revenue stream to its operations. Broadcom CEO, Hock Tan, highlighted the record third-quarter revenue, attributing it to the sustained strength in custom AI accelerators, networking solutions, and the contributions from VMware. He specifically noted that AI revenue experienced an accelerated year-over-year growth of 63%, reaching $5.2 billion in the third quarter. Looking ahead, Tan expressed confidence in continued AI growth, forecasting AI semiconductor revenue to accelerate to $6.2 billion in the fourth quarter, marking 11 consecutive quarters of growth. This projection reflects the ongoing substantial investments by Broadcom's customers in AI technologies. Broadcom stock is currently featured on 3 IBD lists: Leaderboard, Big Cap 20, and Tech Leaders, indicating its strong market standing and investor interest. While Broadcom's AI chip business is clearly a massive growth engine, what are the specific innovations enabling this surge, and how are they positioning the company against key rivals like NVIDIA? We'll explore the cutting-edge products and strategic moves that are defining Broadcom's competitive edge. Broadcom's AI chip dominance fuels upbeat fourth-quarter forecast. Broadcom Inc. is projecting fourth-quarter revenue to surpass Wall Street estimates, fueled by an escalating demand for its custom-designed artificial intelligence chips, as major enterprises significantly ramp up their investments in data centers and sophisticated machine learning applications. The company has emerged as one of the preeminent beneficiaries of the generative artificial intelligence revolution. Its custom accelerators are being adopted by hyperscale customers, including tech giants like Google, due to their exceptional capability in rapidly processing vast quantities of data, a critical requirement for advanced AI workloads. These specialized chips are increasingly seen as a compelling alternative to NVIDIA's high-cost processors, offering companies the flexibility to tailor hardware to their specific, evolving AI needs. Broadcom CEO Hock Tan articulated the company's strong position, stating, "We expect growth in AI semiconductor revenue to accelerate to $6.2 billion in Q4. This follows a remarkable third quarter, where AI revenue surged by 63% to reach $5.2 billion for the period ending in August. This sustained and accelerating growth in AI-related revenue highlights Broadcom's strategic focus and execution in this high-demand sector. Investors have placed considerable expectations on AI-focused semiconductor firms like Broadcom, anticipating that the company's robust market position and expanding product portfolio will drive substantial future growth. In line with this strategy, Broadcom has recently introduced key innovations designed to enhance AI compute capabilities and challenge NVIDIA's dominance in the AI semiconductor arena. These include the Tomahawk Ultra networking chip and a next-generation Jericho networking chip, both aimed at accelerating AI processing and interconnectivity within data centers. King-Gai Chan, an analyst at Summit Insights, commented on the company's performance, noting, "Broadcom's AI-related semiconductor demand continues to shine." Results were driven by both AI interconnectivity, along with its custom ASIC business. This sentiment underscores the dual strength Broadcom is exhibiting in both the foundational networking infrastructure and the specialized AI chip design segments. The market's positive reception to Broadcom's performance and outlook was evident in its stock performance. Shares of Broadcom saw a 3% increase in extended trading following the announcement. This recent gain builds upon a significant upward trend, with the stock having already risen over 30% year-to-date and more than tripling in value over the past 2 years, reflecting strong investor confidence in its AI strategy and overall business model. Financially, Broadcom's fourth-quarter revenue forecast is set at approximately $17.4 billion. This figure compares favorably to the average analyst estimate of $17.01 billion, as compiled by LSEG. The company's third-quarter revenue of $15.95 billion also surpassed the consensus estimate of $15.83 billion, further validating the company's ability to meet and exceed market expectations. With AI chips driving such significant growth, how is Broadcom balancing this focus with its broader infrastructure software and networking solutions? We'll delve into the synergy between these different business segments and what it means for the company's integrated strategy going forward. Broadcom forecasts upbeat fourth-quarter revenue as AI chip demand soars. Broadcom is projecting robust fourth-quarter revenue that is expected to exceed Wall Street's expectations, driven by an insatiable demand for its custom artificial intelligence chips as businesses worldwide accelerate investments in data centers and cutting-edge machine learning applications. The company has firmly established itself as a major beneficiary of the generative AI boom. Its custom accelerators are highly sought after by hyperscale clients, including tech giants like Google, due to their superior ability to process immense volumes of data with remarkable speed. These specialized chips are increasingly positioned as a viable and often more cost-effective alternative to NVIDIA's processors, providing businesses with the flexibility to develop hardware precisely tailored to their unique and evolving AI requirements. Broadcom CEO Hock Tan highlighted the company's forward momentum, stating, "We expect growth in AI semiconductor revenue to accelerate to $6.2 billion in Q4. This follows a stellar third quarter, where AI revenue experienced a significant 63% year-over-year increase, reaching $5.2 billion for the period ending August 3rd. This accelerating growth trajectory in AI semiconductor revenue underscores Broadcom's strategic advantage and execution in a critical, high-growth market segment. Investors have pinned high hopes on AI-centric chip manufacturers like Broadcom, anticipating that the company's strong market standing and continually expanding product offerings will be key drivers of rapid future growth. In pursuit of this objective, Broadcom has recently rolled out advanced solutions, such as the Tomahawk Ultra networking chip and a next-generation Jericho networking chip. These innovations are designed to significantly enhance AI computing power and bolster the company's competitive challenge against NVIDIA's established dominance in the AI semiconductor industry. Broadcom's AI-related semiconductor demand continues to shine. Results were driven by both AI interconnectivity along with its custom ASIC business, remarked King-Gai Chan, an analyst at Summit Insights. This assessment emphasizes Broadcom's strength across critical areas, including the infrastructure that connects AI systems and the specialized chips that power them. The market has responded positively to Broadcom's strategic direction and financial performance. The company's shares experienced a 3% rise in extended trading following the announcement. This recent uptick adds to a remarkable year-to-date performance, with the stock already up over 30% and having more than tripled in value over the last 2 years. This sustained growth reflects strong investor confidence in Broadcom's AI strategy and its overall business resilience. Financially, Broadcom has forecast fourth-quarter revenue to be around $17.4 billion, a figure that surpasses the average analyst estimate of $17.01 billion, according to data compiled by LSEG. This optimistic outlook is built upon the strong performance in the third quarter, where revenue reached $15.95 billion, exceeding the consensus estimate of $15.83 billion. This consistent ability to meet and exceed financial projections reinforces Broadcom's market leadership. As Broadcom continues to push the boundaries in AI hardware, what does this mean for the broader semiconductor landscape and the future of enterprise computing? We'll explore the implications of this intense competition and innovation for the industry as a whole. That's a wrap on today's essential updates. Broadcom crushed Q2 sales expectations and gave a strong revenue forecast. AI demand is absolutely booming, pushing Broadcom's Q4 revenue predictions past analyst targets. The company's custom AI chips are seeing massive growth, accelerating revenue in the AI semiconductor sector. And Broadcom's latest financial results show steady performance, meeting expectations with encouraging future guidance. Don't miss out on what's next. Hit that like button, subscribe to Qualcomm Pulse for more cutting-edge insights, ring the notification bell so you're always in the loop, and let us know your thoughts in the comments below. Follow us on all social platforms for even more exclusive content.